this is Daniela Cambone, and we're about to begin our coverage from the PDAC, the world's largest mining conference. But before we get to our segment today, I want to tell you about one of our most beloved guests, Rick Rule. It's no secret, he's one of my favorite people in the natural resource investment sector. But now he's partnering with my company, Stansberry Research, in a very big way. It's something we have never done before, and it could be a pivotal moment for you personally. Rick warns that this is a unique moment in history, the likes of which he has never seen in his 50 years of investing in the space. And he says if you get this one thing right, you may never have to worry about money ever again. So for all the details about his big prediction and what he's working on right now, head to rickevent.com. Again, that's rickevent.com to hear about the once-in-a-lifetime financial event Rick says is happening right now and will impact nearly every asset you own. Let's get to our segment today. Hi, this is Daniela Cambone. Welcome back. We're here at the Silver and Gold reception at Ripley's Aquarium in Toronto, an event hosted by First Majestic Silver. And with me now is Jeff Clark of goldadvisor.com. And he's out with I have to call you author now. Pay dirt.
I guess
Best-selling author. Pay dirt.
Well, not best-selling yet. But
not yet. Yeah. But after this interview, sky's the limit. No, Jeff, I kid. It's always so nice to see you.
It's great to be back in the aquarium with you, Daniela.
Last year we spoke everything from Billy Joel to, well, I don't know, a bunch of stuff. But want to get your thoughts on the Fed, because we're speaking this week. Powell's headed, to Congress, where he's basically going to be threading a needle, right? A balancing act of, how is he going to tackle inflation without bringing down the entire economy? How tall of a task is that, Jeff?
Well, it's a very tall task, and who says he doesn't want to bring down the economy?
Oh.
That's kind of what he wants to do, because that's going to slow demand down, which is going to bring inflation down. That's the theory behind that. But the problem with that I've pointed out, that in my opinion, is the supply chain issue. The supply chain issue is one that he can't necessarily help by raising rates. In fact, he may hurt the supply chain by raising rates, right? So my wife's favorite cereal is out of the grocery store.
What? Which one?
I can't buy it's some healthy thing.
Okay.
But I can't pay more to get it. I can't get it at all, no matter how much I want to pay. Yeah. The supply chain's a real issue. It'll take a while to bring that down. Even miners are saying, they budget for a certain inflation rate, and their inflation rate internally ends up being higher, all because of the supply chain.
So when you say he wants this, right, and I've brought this up in other interviews, and we know they are an independent body, right? But we have an election coming around faster than we think, and no one's going to win an election with a recession.
I think he wants to be aggressive now, keep raising rates so that he eventually can stop before the election, maybe even bring them down. Did you know that the average time historically between the last rate hike and the first rate cut is only 5 months? If you average all the time periods out since the 1950s, it's only 5 months.
Wow.
We could see him actually stop later this year and 5 months later actually lower rates.
Do you think the whole plan is already set? He knows exactly what he's doing, or just responding month by month? I
think he is watching data. These are smart guys. Whether we agree with them or not, whether we like them or not, they're not stupid. Okay, so I think he is watching data, and I think the main thing he does want to see is he wants to see that CPI come down.
Where's the U.S. dollar headed?
I am a dollar milkshake believer, so I agree with Brent Johnson and all that, and I kind of defer to him on the dollar. On a chart, it does look weak, but if you follow the dollar milkshake theory, it means that the dollar has to get stronger before it actually dies and we go to some type of new monetary system, whatever it is. So,
well, on that note, I recently had Mike Maloney on, who you worked with for many years. He had glowing things to say about you. In fact, he said you are really the contributor to the mining section of his book. But we spoke central bank digital currencies. He basically said, in a nutshell, it's the greatest evil he's ever seen, if it does, the greatest evil.
Yeah.
And I believe you would agree with that, correct?
Well, if they can control it, absolutely. If they can cut you off because of something you do, if they can cut you off because of something you don't do, your social credit score isn't high enough or something like that, that would be the evil part of it.
What's your answer when people are like, well, you know what, I'm not so concerned about central bank digital currencies because, when's the last time you used cash anyways? I use, plastic every day.
The difference is they can control it. There's a direct link that they can control. They may not be able to control your credit card, and I mean the Fed,
right,
or the government,
right,
but with a central bank digital currency, they perhaps could do that.
Here's the other question you can help answer. People will say, well, how is gold going to save me? When we say, well, this is the reason it's important to own gold or silver with the coming of the central bank digital currencies.
The answer
but if I own gold and then need to liquidate, I'm just back in the system.
Gold is the only physical asset that you'd be able to own in that environment. It's the only thing you'd still be able to hold in your hand, okay? So there's still going to be some options you would have in that. It doesn't a CBDC doesn't necessarily mean that all cash would be gone. So you could still go to a small bullion dealer and get cash. You could still liquidate overseas if you store overseas. You and I know.
It wouldn't mean that there'd be no more paper money.
Not necessarily. That's correct. There would still be some paper money. How are the poor going to be able to participate in this? The poor use cash a lot more than they use credit because they can't qualify for a credit card. So I don't think it's going to be the elimination of cash. The other issue is how quickly does this transpire? I don't think this is something that's going to happen by June of this year.
Right.
This is going to take a long time for them to build this kind of thing.
Well, interesting, because I've had some experts like Doug Casey on thinking it could happen as early as this year. Too ambitious?
Look, I don't know. Who really knows?
No one.
And
they know.
Doug knows.
Yeah.
He follows this. But I'm not too worried about it happening in the near term.
Right.
I bought 3 ounces of gold last month, though, when I heard the more stories about CBDCs.
Okay, well, I like that. I want to know more about what you're doing.
Right. I bought, and I put this on Twitter, I bought 3 ounces of gold. I bought shares in a new company pick that we had on our website, and I bought shares of another new company we had on our website. So
you're in physical and the stocks?
Absolutely. I'm physical, and I'm all over mining stocks.
I want to talk Pay Dirt. This is your new book. I know you had a book launch here. It's a great read. It's almost like your 5 commandments, right?
Yeah, right.
You share some of that. And you also shared the story of the scariest mine you entered.
Yes, that's right. It was a mine that I'll leave unnamed, but it's really true that when I went down in this mine, it was a hole in the ground. Some analysts wouldn't go down it, and the dirt was touching both sides of my body as I went down the hole.
I wonder if it's the same mine I went in and then realized that was really stupid.
Yes, there were some people that passed, and I will tell you there were some
people
analysts.
Passed.
They wouldn't go down.
Oh, I thought.
Yeah, no, they didn't pass out.
Fatalities.
Yeah,
I'm like, no.
No, but some people did decide not to go down on.
Thank you. Thank you.
But some people did panic above me, and some people were panicking below me. And then I started to panic, and I was getting claustrophobic. What if there's an earthquake? We're goners.
Right.
It was a little scary.
I'll ask you after which mine. We'll swap mine stories.
But you can read it for free on the website. That's a sample chapter people can read for free and see what you think.
Okay, and I don't want to give away your commandments, but like one takeaway, look, we're at a mining conference. For folks who are maybe entering this space for the first time, I mean, we hear the things: do your homework, look at the management, look at jurisdiction, study.
But the question is, how do you look at management?
Exactly.
How do you evaluate
exactly. If you don't know,
what are you looking for, and what are you not looking for?
Right.
And the great thing about Pay Dirt is it will tell you exactly what to do. It's very specific.
Yep.
It would tell you to look for this, look for that. Look for these kinds of things. And don't forget, there's 16 experts that are also in the book. And the amazing thing I realized after interviewing them all last summer was they were very specific as well. They didn't waver at all. They didn't give general guidance. They weren't vague. They were very clear. Look for this, look for that. They were telling me exactly what to do in terms of percentages, what age group to look for in a geologist, in a mining executive. No ambiguity whatsoever. Very specific. And if you find this, pass on the stock. Don't buy it. Very clear. Very clear. I loved it because it makes it easier for a person. Okay, I'm looking for this and this and this. Here's how I evaluate this and that. And if I see this, I'm going to pass on the stock. The book is very clear.
Very fantastic. Well, urge everyone to read it. I wish you amazing success with it.
Thank you.
Just final thoughts for investors. Overall, about the space, are you optimistic?
Gold cycles. We've had 10 major cycles in gold since 1970. You can chart it out. It's in the book, by the way. You can see them in a chart.
Yeah.
We're obviously in a down cycle now. The last up cycle was very short. It was the COVID bounce, if you recall.
Yep.
That was very profitable for me. Now we're in a down cycle, but after 2.5 years, I think the next up cycle, which is what's going to come next, is probably getting much more closer. So I think people can look forward to that. Don't give up on the space just because something cycles and we're in a down cycle. Prepare for the next up cycle.
Prepare. And if I could just share this, I guess a lighter note story. I remember last year I said, I had just come from the Billy Joel concert, and I said, the song We Didn't Start the Fire.
That's
and I
right.
said,
I remember.
It was written in the 90s, but it's still so relevant today. Like what was happening then is happening now. And before coming here, it actually played on the and I was like, wait, is that a sign that I need to bring this up to Jeff? Because again, time goes on, but almost nothing changes, and here we are, the U.S. in two Cold Wars now, Russia and China. It's scary times, Jeff.
Yeah, that's just another reason to own gold, right?
Spy balloons.
Yeah, right. There was no gold in those spy balloons, but there was some silver in them, maybe.
Perhaps.
And perhaps to make them run.
Yeah.
So, geopolitics is a short-term, temporary thing for a gold catalyst, and gold does rise in those events, but it's not a long-term catalyst unless, of course, you have a major war. Let's hope we don't have that.
Absolutely not. Jeff, Clark, it's always a pleasure. I love seeing you and catching up with you.
It's great, Daniela.
Continued success.
Okay, name the next twins, Argenum and Arum, right?
Jeff's waiting for this.
You're right.
Hi. All right. Well, thank you so much for watching. We'll have more incredible content coming your way, so be sure to stay tuned to the Daniela Cambone Show on Stansberry Research.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.